So me, the next big catalyst to get gold really to take off, I should say some normalization in the equity market, which used to be normal, meaning, just we can't just make record highs for year and year and year and get this expensive with it, expect it to continue. So the biggest, I think, thing for the gold to really accelerate, to have those ETF flows continue to have a first year inflow in a while, is that U.S. stock market going down, which could be led by Bitcoin. And it will just accelerate a pre-existing trend. That's gold beating the stock market. So to me, I'm still sticking in. And that to me is why I put 4,000 in my headline this year. That's a scenario.
The precious metal is on track to close the year with an impressive 27% gain, marking its best annual performance since 2010. This surge has been fueled by central bank purchases, escalating geopolitical uncertainties, and monetary easing by major central banks. As of March 2024, it's estimated that the entire value of all the gold ever mined is around $13.7 trillion. In contrast, the overall market cap for Bitcoin is roughly $1.895 trillion. Senior commodity strategist at Bloomberg Intelligence, MikeMcGlone, states Bitcoin's growing influence on the gold market is driven by political figures' adoption of it as a strategic asset. If Bitcoin struggles, especially around the $100,000 resistance, this might prompt a renewed interest in gold. Gold prices may see a near-term correction as investors reduce their long positions, but persistent inflation and geopolitical instability will ensure that the yellow metal will not see a rout in 2025, according to Commodities Strategists at TD Securities. However, Mike mentions gold's ability to outperform the S&P 500 amid Bitcoin's rise and elevated interest rates underscores its enduring resilience and strength. In various metrics, gold has outperformed the stock market over the last 25 years. Since the start of 1999, gold has skyrocketed by 866.67%, climbing from $288.25 to a 2024 high of $2,756.76. By comparison, the S&P 500 has risen from 1,228.10 to 6,001.35 points, a gain of 388.67%. Regarding the gold-to-Bitcoin ratio, MikeMcGlone highlights its current 38 ounces per Bitcoin as a key market indicator. He notes that Bitcoin's volatility, now 3 times that of gold, significantly influences its role in portfolio allocation. Both Bitcoin and gold surged to new all-time highs in 2024. Even if Bitcoin has rallied more, today's ratio of 35.2 between the cryptocurrency and the precious metal is still below its high of 37 reached in 2021. He predicts Bitcoin's extreme bullishness near $100,000 could trigger a pullback, impacting U.S. stocks. McGlone highlights gold outperforming equities, fueled by central bank purchases from China and Russia amid geopolitical strife. Now we present the clips of MikeMcGlone's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Starting with our president has put it in the forefront of how it helped him get elected. His transmogrification, I like to say, a word I remember learning as a kid, and I can't even spell. His shift away from antagonist to zealot is epic. And now there's a complete burden on this asset, most notably Bitcoin, to go up, particularly because he's made calls and his son has made calls that it should be going higher. And things like the strategic Bitcoin reserve and things like that. But it's also now we've had significant amount of inflows in ETFs in Bitcoin and significant 4 years in a row of outflows of gold ETFs. So, the analog and the digital, highly volatile speculative digital asset has to go up or it indicates down for everything. And that's a problem I have now, Tom. I just finished writing my outlooks, my commodity outlook for metals. You can't mention gold without Bitcoin in the same space because it is been, to some extent, demonetizing gold. The thing I've been saying for years now is you can't hold gold anymore without some Bitcoin in that space. It's somewhat irresponsible, not acknowledging the trend in digitalization. But we're at the point where I think Bitcoin just reached a significant milestone. And then you have to look at yourself as it has to go up now. And if it doesn't, it means most of the dominoes indication, all the dominoes are going to tumble. I think it's at that stage because of that shift over into our new president, who's basically judging his performance based somewhat on risk assets, which means the stock market, and what's the riskier one? Bitcoin. Also has a very high correlation to the stock market. Right now, 0.5 on a 100-day basis is the highest on the way up ever. Of course, Bitcoin's only been around really for 10 years, realistically. So to me, the key thing also, I think a key thing to think about for next year is, in a year like this, when we've had U.S. interest yields are still high, the stock market's on a tear, And the most significant competitor for gold, Bitcoin, is just taken off. That gold still outperforms the S&P 500. To me, it's a good sign of strength for continuing strength for gold. And gold's had a decent pullback. It's dropped about 10% from its peak. So I think the key detriment and key point looking for gold next year, key thing that will accelerate is for gold next year is if Bitcoin backs off a little bit, maybe continues to back off from this threshold at 100,000, significant resistance, and makes all those ETF buyers realize that they're the high speculative digital asset. And what they've been telling me that it just goes up, might not, will make it tilt back towards gold. And we're seeing that uptick in gold ETFs. We're going to have the first up year in gold ETF in 5. And the key thing, I think, for all that is Bitcoin going down, the U.S. stock market pulling back a little bit means there'll be a lot more interest in gold. Been very bullish on gold, and I like to say you're not supposed to, I think it's very irresponsible to hold gold anymore without some Bitcoin in space, some in quotes, between 1 and whatever percent you want to do it. But I think that gold Bitcoin ratio, I've been watching that for at least a decade. And the ratio right now is 38 ounces of gold per 1 Bitcoin. That has put in a pretty significant peak. It's been a great leading indicator. That gold Bitcoin ratio, it usually leads beta, usually leads the stock market. It's been lagging for a while. So I'm glad you mentioned it, Tom. It's actually one chart I put up before I spoke to you because I wanted to go there. So to me, they're in the same space. Bitcoin typically is 3 times the volatility of gold. It used to be before the futures were launched in 2017. It was closer to 10 times. Obviously, it was a baby. It's still coming down, but volatility is still high. But to me, it's indicating pretty significant divergent weakness. Now, it did make a new high, but it's well below the stock market made a high in April, and Bitcoin gold really dropped. And it's just catching up now, but after this major shift from our president. So I think the risk is it goes down some more with the U.S., just to back up the U.S. stock market. I don't know how far, but it's so extreme here. And this threshold in Bitcoin at 100, it's so extreme. And the bullishness is so extreme. It's part of being a commodity person. I have the curse of being a contrarian because the lessons of commodities go down because they went up, which is what's happening in crude oil and copper and grains. Stock market's the opposite. It goes up because it went up. It's just until it doesn't. At some point it gets there. But that's where I'm kind of concerned about this stretched and lagging Bitcoin gold ratio compared to beta. And that's the key thing that we started out earlier. The fact that gold has been outperforming the stock market, they're significant. Now we know why. The deepest pockets in the planet are buying it, led by central banks, most notably China. And why? Because there's this Cold War going on, led by one key person, Mr. Z and Mr. Putin, well, two-person peaceful people. But Mr. Z did the tilt rather than he could pick up the phone someday and say, hey, Don, the new Donald Trump, Mr. President, can we be friends? This guy Putin, he's not working for me. That could be a major shift. I doubt it's going to happen. I do love that Bitcoin gold ratio. I've been watching this Bitcoin gold index for a while. CoinShares puts it out, and I think it's a good way to be involved in the market. But it's what that index does, CoinShares has a gold Bitcoin ratio, is it weights based on volatility, which I think is appropriate. Since Bitcoin has 3 times the volatility of gold, it should be weighted much less in a portfolio than gold.
Experts like MikeMcGlone emphasize silver's challenges, noting its underperformance relative to gold. He describes silver as more of an industrial metal, heavily tied to China's economic performance, and sees its price as largely dependent on gold's momentum. Additionally, silver prices face pressure from a constrained industrial outlook driven by overcapacity in China's solar panel industry. This has led photovoltaic companies to participate in a government-led self-discipline program to regulate supply. Pressure on silver prices was also noted due to concerns over a potential yuan devaluation, which aligns with China's looser monetary policy stance. Silver prices surged with gold, reaching $30 per ounce in August 2020. Supply chain disruptions and heightened industrial demand fueled the rise. Silver has remained strong, supported by its crucial role in solar panels and electronic components, aligning with global clean energy initiatives. Prices have ranged between 35 to 51 Australian dollar per ounce. Technically, Mike predicts the gold to silver ratio, currently at 89, is more likely to rise toward 100 than to fall below 80, particularly as U.S. stock market volatility remains low and global demand recovery struggles. Let's get back to the interview.
I say that facetiously because it's up 22%, but gold's up 26%. On a volatility silver to gold ratio basis, silver should be up almost 40%. It should have been up 50% earlier. And now it's dropping back below 30. So I'm really worried about silver. Silver to me is it's not nowhere near a precious metal. It's an industrial metal. It's been demonetized by gold forever. Gold's getting a little demonetization from Bitcoin, but silver to me is much more in a bucket of copper. I think copper it's an industrial metal related to China, and I think it's more likely to go to $3 copper, which means silver's got a problem. silver, to me, is only going up on the back of gold. You look at most of the other precious metals, platinum, palladium, they're just kind of trying to inch up with gold, and they're not, because are central banks buying silver, platinum, or palladium? No, they're buying gold. Maybe they will, but to me, that's the problem. So for silver to really outperform, typically you need, and also for silver to underperform in a year like this with the stock market doing that well, that's bad. The key thing is China. You look at China's bond yields plunging, 176. China's Hang Seng, yeah, it's bounced this year, but it's way underperforming the S&P 500, and it's not doing anywhere near as well as you expect with the Chinese government actually buying it through ETFs. So the key thing I do like to watch is gold silver. Right now, it's 89 ounces of silver per ounce of gold. That upward trend is intact. I think it's eventually more likely to head higher. And it almost always heads higher when U.S. stock market volatility bottoms, and volatility in the stock market is at a basically 10, 15-year low. If you look like the 50-week or 200-day moving average of the VIX volatility index, and almost silver gold ratio almost always goes up when U.S. unemployment goes up and the curve disinverts, which is all kind of happening right at the moment. And so I think silver gold ratio is more likely to head towards 100. Right now it's 89, than to trade back down much below 79 or so. So let's say it's at 90. So the next $10, the next 10, I think, is more likely to get to 100 rather than get below 80, gold, silver. So what stops that? Pretty organic demand pull forces recovering in the global stage, most notably from China. And their increasing dependence on fiscal monetary stimulus shows their tilt. They're in a reverting emerging market that made the mistake of cozying up to the wrong country.
Though the price of gold can fluctuate as it's traded on exchanges around the world, it retains its value well over time, and large rapid swings are historically uncommon. Many banks, including Goldman Sachs, Citi, ANZ, and Commerzbank, raised their initial forecasts for gold as they were faced with the possibility of a banking crisis. How do you see the interplay between Bitcoin, gold, and silver evolving significantly in the coming years as global economic uncertainties shape the markets? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.